Many thanks for joining us on Captains of Industry. On this edition, we'll be speaking to Mr. Abdala Abdul Khalik, who is the Managing Director of Gulf Africa Bank. The bank is trying to drive an ambitious growth strategy. We understand that you're in the process of increasing your branch network. Which countries are you looking at, and what is driving this expansion?
Gulf African Bank was licensed in 2007, but we started operations in 2008. It was set up by a group of investors led by our former chairman, Mr. Suleiman Shahbal, and we started with the very first branch in Nairobi, and then we expanded rapidly to 15 branches to where we are today. The bank has a very ambitious expansion plans for Kenya and indeed for the region. We are hoping to open 5 new branches in the course of 2016. As a matter of fact, Eldoret branch is already under renovations. Then we are looking to go into Nakuru, Mandera. We will open our second branch in Lamu, now in the mainland area of Mokoe, where the county government offices will be, together with LAPSET and all other initiatives that are coming in that region. So we have those plans to expand quite rapidly from here. We are also looking into regional expansion at some point. Our first frontier will be Tanzania, where we are keenly looking to have a footing there. But the plans are also to expand within the East and Central Africa region. This year alone, we are putting aside over 100 million shillings for Kenyan expansion. And as I said, we are also looking to go beyond Kenya. But for this year alone, we have put aside more than 100 million shillings for just branch expansions. And we're also trying to increase our channels through through different ways of doing it, through agency banking. And also we have introduced mobile banking, whereby we can now do branchless banking for our customers. But the plans are there and the money has already been put aside.
The banking industry has faced some degree of uncertainty in the last few months, 3 banks being placed under receivership. As the captain of Gulf Africa Bank here in Kenya, what would you say about the stability of Kenya's banking industry? The other area of concern is that we've seen a lot of people having a misconception that Gulf Africa Bank specifically offers products for the Muslim community. And of course, we'd like you to give us the true picture. Does the bank also cater for the non-Muslims? And is it a market that the bank can reach out to and be able to grow over the years?
It's not easy to compete in an overly crowded market like Kenya. Kenya has more than 40 banks. In fact, when we opened this bank, we were number 41. Today, we are ranked number 21. So we have surpassed banks that have been in existence even well before us. Some banks have been around since 1950s, and we have surpassed them. So one is I attribute this to our dedicated staff who are there. And number 2 is the customers out there who have supported us, who believed in our product and came in to support this banking system that is Sharia banking, which was the first of its kind in the East and Central Africa. Our ideas were more informed because Kenya has a population of 44 million people, out of which 10% is said to be of Muslim faith. And that becomes 4.4 million Muslims. And we said if Kenya has 4.4 million Muslims, then maybe it's time for them to have establishments of their own that they can relate to their faith, such as banks, such as maybe universities, such as health centers and things like that. Just like what you see in the industry, like the Aga Khan Fund and the Aga Khan hospitals and the Aga Khan school and things like that. So this was one of those initiatives. Now, if you say conservatively, for example, out of the 4.4 million Muslims that are there, only maybe 20% or 25% are bankable, that would give you a number of 1 million people. Now today, you asked me earlier, I told you our customer base is 70,000. That tells you the potential that is out there. Okay, out of the 1 million people, we only have less than 10% of that. Okay. So there is huge potential for the product that we are offering, and there is also enough space even for another bank to come and offer this same product. Having said that, I also want to reiterate that we are selling a banking concept. We are not selling faith. It's a concept of ethical banking as guided by the Sharia. But this concept is open to everybody in Kenya. People of all faiths are welcome to bank with us. And we try very much to send out this message for people to understand what is that concept that we are talking about. We have a sizable number of people, of customers who belong to different faiths other than Islam. So we have captured a little bit, but I think we need to do a little bit more for people to understand what is the product that we are selling here.
The hot topic right now in the banking industry, of course, is bank consolidation. I'd like to pick your mind and just get your thoughts around, is the bank consolidation way the way to go, or should we wait a little bit more? Of course, we've seen the National Treasury trying to push for the raise of the core capital from $1 billion at the moment to $5 billion. Will banks be able to cope with this?
I think consolidation is a good idea. We need fewer banks so that it will also give some more confidence to the Kenyans out there. People will be able now to compete more aggressively in this market. Remember, 70% of the market share is controlled by the top 5 or 6 banks in this country. The remaining are scrambling over the 30% for that. Merging will put us more within a level playing ground. So I think that is a good idea. The increase of core capital is also a good initiative. I think it was recommended by Minister Rotich during last budget speech, but I did not go through Parliament. I suspect it will be reintroduced during this budget speech. And it was supposed to be a gradual increase. By 2018 is where banks are required to build up to 5 billion. It will strengthen the position of banks. For us, we are already at around 3.8 billion in terms of core capital. We expect to raise it to almost 5 billion this year, even before that regulation comes into play. So we expect it to be there. Our shareholders have always retained their earnings and reinvested it into capital. This bank started with a capital base of 2 billion. We went down during the first years because the first 2-3 years, of course, you have to book losses. But we have recovered the 2 billion. We are now at 3.8, and we are injecting new capital in the course of, hopefully in May, we are putting in some amount, and by end of this year, we should be in the region of 5 billion ourselves.
What are some of the risks that we may face as a country when we see banks not being able to meet the core capital requirements?
It will put more pressure on the big banks, because now you will not have smaller banks anymore. You will have medium-sized banks, because if 2-3 banks merge together, then they will be stronger than if they were separate. So it will put more challenge to the bigger banks.
As a bank, one of the key areas you have been keen on tapping into is the women as well as the youth. Perhaps just update us on what the bank is doing to capture this market.
The SMEs in Kenya, or the MSMEs, companies are about 2.3 million companies that are there. Okay. Out of that, only 35% is women. Okay, the rest is just dominated by men. And here is what we want to try to do, is to encourage women to take up this entrepreneurship. Okay. Now they will only do it if you, first of all, make the environment conducive for them. They should be able to access credit, and they should also be empowered technically to undertake these opportunities that are there. And that's where capacity building now comes into play.
Finally, Mr. Abdala, what is the outlook for the bank now that you've posted impressive numbers with profits rising close to 81%? What is in the crystal ball in 2016 for the bank?
We are looking forward to having another exceptional year. I want to assure our customers out there that this is their bank. It has never been stronger than it is today. We are at the peak level of financial strength for this bank, and we are rolling out a very ambitious plan to have branches everywhere in this country, creating employment and empowering people to access credit so that they can also participate in the building of the economy of this country. Our financial performance has been very good. We had a record year in 2015 rather, with 81% growth, as you mentioned. And in fact, the growth has been across the board, not just from the P&L area, but also from customer acquisition, from increasing asset book, from the liabilities, customer deposits, all have recorded incredible growth during 2015.
Well, that's how we wrap it up on Captains of Industry. We were speaking to Mr. Abdala Abdul Khalik, the Managing Director of Gulf Africa Bank, just sharing with us the growth strategy for the bank.
Thank you. Thank you. Karibu.